Understanding how to read the tape and combining that with trading supply and demand is a very powerful trading strategy. And in this video, I want to show you two different trades that I took on two different days on both using the tape along with supply and demand zones to come up with a high quality setup. I want to get into some market context, some trades that we took in my Discord community, along with some important psychological tips to better improve for trades that we take in the future. Before we get into it, I'm going to post a link for my Instagram in the description below at Ameritrade. I definitely recommend you to follow this. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. But now let's get right into the video. The first thing is we have to get some market context and understand the larger picture analysis, which I think is very important for any trade. And specifically talking about the S&P 500 along with NASDAQ. This is the ES, the S&P 500 the E-mini futures. And last week, April 21st and April 22nd, we had two very large aggressive sell-off days where every single demand zone from the rally prior to that sell-off got completely destroyed. And in these days, demand zones were not very reliable as we have normally been seeing. So with this context and about a 250 point sell-off in 2 days, the market going into the weekend, that was a Friday, now going into Monday was opening up a little lower than where we closed at the previous day. So everybody on Monday was expecting very bearish action. And from an intraday perspective, I want to go over the pre-market plan. I post these every single day in my Discord, levels I'm looking out for, and potential trading setups. So I said the past 2 days, there were zero signs of buyers. This factors in a lot to my analysis because if we are trying to play a move off of demand or trying to play a long position where we haven't seen it the past 2 days, I think any other setup, even if we do have demand, is going to be trickier and a lower probability until buyers really prove themselves today, which I said in the pre-market plan. This was from Monday, April 25th's action. So I said I do believe that 4231 demand and more importantly 4206 demand, which is this green box right here, will hold. If we do sell off into it, I'd rather let it bounce and play a retest and once buyers have proven themselves. So a important note I want to make here is when everybody is bearish, look for ways you could become bullish, or look for ways that when everybody is in puts or everybody is in short, look where the market could stop them out at, because those might provide very high probability reversal points in the market, because the market takes away from a lot and it gives to the few amount of traders who are patient and are trading with a solid strategy. So the market in the first, I want to say about 2 hours, was very flat. We were consolidating. And in this range, a lot of traders are going to get chopped out at. If you are impatient and you're either playing puts because the market's coming down or playing calls just because we're going up, not even hitting demand, then you're going to get stopped out. And I think any setup is going to be a little bit of a lower quality one, and it's going to be a little more difficult. Now, I have a live recording of what made me kind of flip this trade to the long side. I played SPY calls as we did bounce off of demand. Now, with that context that I mentioned earlier about buyers really not proving themselves, it wasn't until about 4206 that the market really showed its first signs of buyers, and this is where reading the tape is very important. So as the market is selling off demand, I have a rule where I don't like being a first buyer after such weak market context. However, we were bouncing out of this demand zone, and we did find the first sign of buyers that really made me bottom tick this market and play calls literally at the bottom. This doesn't happen often where I get the best fill possible, but going to a 1 minute, I want to show you exactly what I saw. So now, I'm going to pull up the live recording of Bookmap. However, I do want to say that Bookmap visually shows a heat map of the level 2 and a live recording of the time and sales as it develops in real time. It visually portrays a normal time and sales and a normal level 2. It shows the same information, however, visually in a different way. So everything I'm explaining right now on Bookmap relates to level 2 and time and sales. So as the market and as the S&P is selling off into this demand zone, specifically, I got long at 1156 when the market looked like this at the low. Now, what I saw here is as the market's selling off into demand, the book kind of flips and we start seeing some buyers step into the market, which was the first time that we've seen it in the past 2.5 days. Now, the demand was at 42.06, so we are trading about 10 points lower than that. However, as the sell-off, as we were selling off, you can see here that we saw some aggressive sell prints. And kind of when we broke below 4,200 bucks, we saw the book change and start flipping towards or leaning a little more towards the bull side. This doesn't suggest a possible rally. However, what really made me get in this position to the long side and what gave me a lot of confidence was watch what happens as the market moves up. So what we're going to see here is if we were looking at the level 2, we're going to see a very large passive buyer for about 713 lots passively have an order to buy at 4,200 bucks. You're going to see it any second here by a very large red line. So what this tells me is there's a very large passive buyer in the market, and I have a volume profile up here. And how I read this is why reading the tape is important, is because this large buyer gets filled. This is the first really convincing action that we've seen the past 2.5 days. And watch what happens. As the market moves up, we start selling back down and this buyer gets filled. How do we know he gets filled? Well, his order of 700 lots gets hit by an aggressive sell order. And I view this as he brought the market up, attracted a bunch of shorts when the market came down. They filled his liquidity. He got filled his long position. And now if we could show aggression to the upside and more aggressive market buy orders come into the market, then we're going to get a lift off. So watch what happens here as we pull back into 4,200 bucks. A very large red bubble, aka a very large aggressive market buy order gets filled. His passive buy order gets filled, and a market sell order filled his passive buy order. He's now filled. How do we know he's filled? Well, the volume profile showed the completed transaction of about 700 lots at 4,200. So now we have a large buyer factored into the market. At this point, I'm in long. My stop loss is below the low. I'm risking about 6 or 7 points to potentially make, if we're targeting VWAP in this case, to potentially make about 22 to 24 points. Now, my execution was flawed. I did not have very good execution on this trade at all. But watch what happens my entry was great, but my execution was awful. Watch what happens as the market breaks above. This is where that buyer got filled. Look at the aggressive buying that starts coming into the market. This is something you want to see. So if you didn't get long earlier when his 4,200 got filled, maybe you could have got longed on a pullback, or maybe you could start looking to get long right now. Your risk is a little higher. However, compared to the reward, I think it's still valid. And this is the first true sign of buyers that we saw in the past 2.5 days, starting from Monday's action. And this was clean signs of buyers with very, very low risk. From a probability standpoint, it's not the highest. However, from a risk to reward standpoint, I think it was pretty high and it offered very little risk with a lot of reward. And then the market just started to continue to rally. Look what happens here. More aggressive buyers come into the market from the low. Clear flip of the book, as now what we saw earlier was aggressive selling. Now we're starting to see buyers step into the market. Very aggressive buying program came in, and we had a clean rally towards the end of the day. The contracts that I were in at $1.25 went to $6.50 by end of day. I have major FOMO from not holding on to runners, and I got out pretty much where I entered because I accidentally sold instead of adding or buying more to my position. Like I said, terrible execution, but solid analysis, and a lot of members capitalized on this long move. And this move up actually formed new demand, and this is going to be very, very important going into Tuesday's action on April 26th. And Tuesday's action was extremely bearish. Those new zones that formed the day prior showed no signs of bouncing at them on Tuesday. Same thing with the NASDAQ. The demand zone that we bounced at the day prior, even in the first about 2 hours, was putting in lower lows, very aggressive, heavy selling pressure, and absolutely no signs of buyers, which makes it not right to play to the long side because, what on this chart shows anything signifying buyers are present in the market. So how I took a trade was basically market context and putting the pieces together. So the first setup was on Tesla. From the pre-market plan, we had this 976 level, And every time we bounced at it, or every time we hit it, we bounced at it. Keep in mind, this level was on the chart probably about 2.5 weeks ago, before we even did test it. And every time we do test it, we bounce at it. So what we were watching for was if we had a very weak market and very strong interest on Tesla failing to hold 976, I'm open to scalping puts targeting the 950 area. So going to a 5-minute chart, you can see this looks identical to NASDAQ. Very, very heavy selling pressure, sliced through that 976 level and hit 950 about 10 minutes after that. Very aggressive sell-off all day. We have other names like Apple, very aggressive sell-off, showing absolutely no signs of buyers today. We have a name like Microsoft, very aggressive sell-off, breaking below demand. Amazon, same thing. So market leading equities were extremely, extremely weak, which did not help the S&P 500's demand zones, and it did not help the NASDAQ's demand zones. So with this context, and especially watching NASDAQ with these other equities and the S&P, I was really not interested in playing calls off demand. I was really not interested in being a buyer. Now, when you add on top of, let me move this over here. When you add this different context of intraday perspective of the tape, again, you do not need Bookmap to use this, but Bookmap will help you visually see it a little differently. I want to note something pretty significant in the intraday auction. Now, I even posted about this in the intraday commentary tab, where every single move up in the market got sold into, meaning strong buyers to the upside. And every time we move up, a seller is sitting there passively, absorbing all those buyers on the way up, and he immediately hits the market down. And I said there's nothing bullish here until the reaction is different. Now, what we could use this as is look at every single time where my cursor's at right here is where the market opened up. Every time we tried to move up, we failed. We tried to move up here, we failed. We tried to move up here, we failed, right? So every time we start seeing green buyers come into the market, it fails. And sellers on the other side aggressively hitting the market after that buyer gets exhausted and basically, or a large passive seller gets filled, absorbing all those buyers to the upside. So there's a buyer for every seller and there's a seller for every buyer. For every transaction, there's an aggressive participant, and every transaction, there's a passive participant. How I view this and the reaction after is there's a passive seller basically taking away all the liquidity from those buyers. Buyers run out of fuel, and that seller aggressively hits the market and moves it back down. With this context, basically what I said in the intraday commentary tab, it's funny because I kind of contradicted myself, but this is a very important lesson. 1 minute, I was really not interested in taking a trade. In fact, that was about 10:08 Eastern. I said, to sum it up, I'm being patient at these levels. The market could go either direction with the current information. When I feel like this, I know the probabilities are not in my favor, and I hold off until I could properly get a feel with the action. Literally 4 minutes after, I saw something significant on the tape. Again, what I highlighted earlier, let me zoom out of this. Every time we move up, we fail. Every time we move up, we fail. Every time we move up over here, when price was at 42.50, I was expecting the market to fail, and I posted this update at 10:12 Eastern. I tried to get it in there as fast as I can. This kind of makes me want to do voice chat more often in the Discord, because it kind of made me get a little bit of a delayed entry posting this for everybody. But I was watching to play puts if we got selling pressure below that failed rally, targeting the 4237 demand zone. And about 3 minutes after the target got hit, I got in this trade at 10:13 Eastern when the market looked like this. So without even looking at the tape, we could kind of visually see what every failed rally looks like, right? We could see this move right here, failed rally. This move right here, failed rally. This move right here, failed rally, right? So visually, just looking at the candles, we could kind of see it. And this is very, very bearish in my opinion. Same thing happened here. And as the market started moving down with heavy selling pressure, I took puts. And it was a setup that it has to work out right away, or else my analysis is incorrect, because I was scalping with larger size. and then we got a quick push into demand, and at 10:18 I got out 80% of my position. Wanted to hold runners because there was no signs of buying at this demand zone. Equities at this point were very weak as well, continued to sell off with no signs of buyers. Very important to use all the factors and make sure all your stars align to come up with high quality setups before you enter the trade or even during the trade. And then as we start selling off, 10:23, got out the remainder of my position just to protect myself. And yeah, I could have got a couple more points off of that, and I could have maybe held until 4206 demand, but I was comfortable with my profits. I didn't have an ideal exact target in mind or stop loss in mind, but it was just basically an all-day sell-off into the same demand zone that we bounced at yesterday. In hindsight, I should have held into this demand zone, but I followed my plan, and then we consolidated. And by the end of the day, we're really not showing any clean signs of buyers at this zone. Very, very similar action to last week and not finding buyers anywhere. So that's basically highlighting the importance of reading the tape and combining it with supply and demand, whether you are playing long off demand or even maybe playing puts targeting demand. You don't need Bookmap, but you could use the regular level 2 and time and sales with this analysis. Everything I just explained, you're going to see it on this. However, I do think Bookmap visually represents it a little bit better. And if you missed something, maybe we missed, let's just say, a large buyer on the level 2 or even on the time and sales, we could go on Bookmap and visually see, an order that came in at 12 o'clock. Whereas right now, we're not going to be able to see that on the time and sales, So I think I'm going to end the video on that note. Definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. Leave a like and comment if you have any questions. Be sure to subscribe to the channel, and peace out.